Hello, everyone. My name is Barbara Armstrong. I'm a coach with Charles Schwab, and I appreciate you joining me for this trade management mini session where we are going to review 6 trades that have hit targets in our example trading account in the last week. Now, this is a companion class to the Trading a Smaller Account webcast, so I hope you will find this helpful. Just before we get into the thick of things, I want to invite you to follow me on X. My handle is at Barb Armstrong CS. You can now also find me over on LinkedIn, so I hope you'll find and follow me there as well. A quick reminder that everything that we discuss today and that we discussed in placing these trades originally was for example purposes only, none of it to be construed as a recommendation to trade any particular stock or investment strategy. Know that options carry a high level of risk and aren't suitable for all investors. All of the trades we're reviewing today were option trades, and we are using the Paper Money software application on the Thinkorswim desktop platform. Okay, so let's get right down to business. I've got my sleeves rolled up and we're ready to go here. So we're going to start with Lennar. So with Lennar, we did a bearish trade. It was a long put vertical. Our strikes were at 195. So the goal was for it to trade below 95 and stay there. And the day we placed the trade, it was already through both strikes. And because of all the volatility in the market right now, we said, you know what? Our typical target on a long put vertical is 50%. How about we make it 25% instead and just be a little more modest? Now, had we made it a 50% target, especially with the action that came a couple of days after we got out, we would have likely hit it, but we're trying not to be greedy here. So we placed the trade here on the 19th and we exited the trade on the 26th. And if we come to our monitor tab and the account statement and look at Lennar, we can see we did one contract. We paid $340 to get in, and I've done the math here in the scratch pad on the side. So we did one contract. We were risking $340. We got out for $415. So we made a grand total of $75. Now that may not seem like much, but our account this year started at $25,000 and our goal was to make $100 a week. So that puts a good dent in our weekly goal. Our return on risk was the $75 we made divided by the $340 we were risking, or 22%. Okay, so that was the first trade, and it was a bearish trade. Second trade, also bearish. So we did a trade on Meta, and let's look at the chart first. So on Meta, we had this diagonal support level that it had broken below. So it broke below that. You know, it kind of hesitated for a day, broke below, and then continued to fall. And we said, you know what, does not look good for Meta. So we did this long put vertical. Our strikes were at 600 and 595. So here's the 595 strike. And, you know, we had a modest target on this one as well. And so we hit our target on this one a couple of days later on the 26th, and we were out. And so if we come and we look at this, so we were risking $225 a contract. So we did 2 contracts. Again, our max risk per trade in this trading a smaller account was 500 to 550. So we did 2 contracts. We got out for $295. So we made $70 on each of our 2 contracts for a total of $140. Now we're not taking commission or transaction fees into account here. So, you know, we'd have to take that off, and that would be per contract $1.30 to get in and $1.30 to get out. You know, and so when you take a look at return on risk, we were risking $225 a contract. We made 70, so that was 31%. And I said we were aiming for 25, but when you're putting trades on live in the marketplace, sometimes the prices are fluctuating. And so there can be a little bit of play in there. And then sometimes you get like a paper money fill, what we call, you know, a more advantageous fill. Now the third one was KMI. Now this was another vertical, but this was bullish. It was a long call vertical. And our strikes were at 33 and 34. We placed the trade on the 19th of March. And it hit our profit target here on the 25th. And so if we come to our monitor tab and we type in KMI, and here we've done several trades on KMI, but for today's discussion, we're just going to look at this one where we did 10 contracts and we paid $54 a contract. So we were risking $540. We got in on the 19th. We got out on the 25th, our 10 contracts for 68. So, when you just subtract one from the other, we made $14 a contract or 14 cents a share. So we made 14 cents a share times 10 contracts. So that's like times 100 would be $140. We call that a base hit in our class. And when you take that 14 cents a share that we made and divide it by what we were risking, which was that $54 a contract, that was a 25% return. So, 3 modest returns were happy campers. And then we did one on CrowdStrike. And so, we placed all these trades fairly close together. This one was placed on the 20th. And then it hit our target on the 25th. So, and this was a more expensive. This was $10 wide, 410 and 420. It was $525, which is kind of at the top end of our risk range, so to speak. And we got out for $730. So we made $205, right? Doing the math. And, we had one contract, so that was $205. And we were risking $525. So we made a return there of 39%. And I actually think what happened with this one is that I put the exit in and then it expired. And so when I saw it was up 39%, I went in and put in an exit on that one. And so it's important that you look at your trades on a daily basis. So if you come to your activities and positions and you see a trade that doesn't have a little chiclet beside it, it means you don't have an exit in place. And so that's something you want to take note of also. Now you notice there isn't a chiclet here on target, and that's because we exited that position today. So if you come and look at filled orders, we can see that, we closed out this position. Okay, so back to our trade review here. So that was a 39% review. And now to look at the downside, we did a trade on MCHP. And MCHP, Microchip Technologies, this was a bearish trade. So here's a stock, it's down almost 6% year to date. We saw a bear flag. We had a close below the low of the high day. And then the following day when we met, we placed this trade. And here was our target. Now, I'd say this was an unsuccessful trade for 2 reasons. So one is we lost money, but I will sometimes say it was a successful trade. It just was a trade that didn't make money. And so why would I say that? Well, I'd say that because if I look at this trade, did the entry make sense? Yeah, this day would have been better, but this day still seemed legitimate. Like I couldn't have foreseen this. So, and some trades just don't work out. But with this one ATR target, our example trading plan says, if at the end of the next trading day, it hasn't gone down and hit this target, this 59.05, we're going to come in and move the stop down to 50 cents above the high of that day. And the high of this day was 64.90. So our stop should have been set at 65.40. And I missed following up on this. So we should have been out this day. And had we been out this day, there would have been, 6 days less of time decay. We would, in all likelihood, have lost less. And so not only did we lose money, but I didn't manage it according to our rule plan. So when you look back at a trade, it's like, did the entry make sense? Did I position size appropriately? So we did position size appropriately. So check for that. Entry was solid. Check for that. but we mismanaged the trade once we placed it. So don't do that again. We can't, we have the opportunity to learn from our mistakes. So we lost $168 on that for a loss of 58%. Now, the other bit of good news is that we did manage to exit the trade for $117 or $1.17 a contract. We could have lost more. It could have been worse. Okay, and the last one is Micron. Now, Micron was another trade that did not make money. We did a long call vertical, and when we come back and look at this, like here's a stock that even after this pretty dramatic pullback is still up 12.7% year to date. We had this fantastic earnings announcement, and the stock gapped down on the open to this diagonal support level and then rallied pretty dramatically. So it has a red outline because it was still closed below the close of the day before, but it rallied quite dramatically during the day. And we thought, well, it had a good earnings announcement. Methinks from a technical perspective, this might continue to go up. And so we did a long call vertical at 440 and 450, and we were wrong. We being me, in this example trade, it didn't go up, it went down. So by the time we got to this day here, we said, okay. And one of the things we do is we look at these positions daily. And I don't know if I have any of these on. Let's see if we have a long call vertical. We exited our long call vertical position. But if we look at our long put verticals, it's pretty quick. You can look at this and go, are you close to 50% up or down? And if you are, then you look at it a little more closely and say, do I stay or do I go? Very quick to do. So when we saw this on Micron, we were down 50% on this day. And our rule on that is if you're down 50%, you exit. And so when we looked at this, we said, okay, we're down more than 50%. So we decided to exit on this. We got out for 210, which means we could have lost $210 more. But as it was, we were down $290 on that one contract, which tallied up to a 58% loss. But when we look back, did the entry make sense? It did. In hindsight, it didn't work out. But was it successful in that we position sized appropriately? When we went back, the setup looked still legitimate. We didn't overlook something, and we got out when our example trading plan suggested we get out. We managed the trade appropriately. So guys, that's a wrap on those 6 trades. Micron and MCHP, which turned out to be losing trades, CrowdStrike, KMI, Meta, and Lennar, which added, a little gold to our coffers. I hope you have found this helpful. Thanks for sticking with us, and lots more great videos to come your way. Take care, everyone. Bye for now.